Have you ever noticed that when you look at the price chart, the market seems to bounce from the same levels, almost like it's hitting an invisible ceiling or floor? That's what traders call support and resistance. Support is like the market's floor, while resistance is like the market's ceiling. And once you understand these two ideas, you will start to see the chart in a whole new way. In this video, I will explain what support and resistance are, show you how to spot them, and why they are so powerful in trading. Support is a level on the chart where price tend to stop falling and bounce back up. Think of dropping a ball on the floor like this. The ball doesn't go through the floor, but it bounces. That's exactly how price behaves. On the chart, every time price comes down to this level, it bounces back up. Why? Because buyers believe this price is very cheap and they jump in. Imagine gold price is 3,340. Every time it falls to 3,250, traders think, wow, this is too low, and they just start buying it. That creates support at $3,250. Resistance is the opposite. It's a level like this one here, where price stop rising and fall back down. Think of drawing a ball towards the ceiling. No matter how hard you throw, the ceiling pushes it back down. On the chart, when the price keeps hitting the same high and failing to break through, that's resistance. Here is an example. The euro versus the US dollar keeps hitting this resistance around 1.1730. But every time it does, sellers step in and pushes the price back down. This level becomes now resistance. Let me give you a little bit of the inside part of support and resistance and why these levels matters. All these levels matters because they represent the human behavior. At support, traders remember that every time the price comes here, it just goes up. So they place buy orders again. At resistance, traders think, last time it couldn't go up, so I will place a sell order again. And here is the fascinating part. If price breaks through resistance, it often becomes support. And if price breaks through support, it often becomes a new resistance. We call this the change of polarity. This happens because traders' psychology flips. Once support breaks, people who missed selling from this level, they are now eager to sell from the same level on the retest. Let's do a practical example. This is the chart of gold. I choose the daily time frame and notice how many times price touched this level and bounced. Look at here. This is where sellers step in, a clear resistance. Look at this one here. The broken support becomes now a new resistance. When resistance breaks, turns into new support. In any time frame you look, you will find the same concept. Support, multiple touches at the bottom, resistance, rejection at the highest prices, and when resistance turns into support, and the opposite when support turns into resistance. Now, a quick warning. Beginners often make these two mistakes. The first, they draw too many lines on the chart, only mark the most obvious levels. And the second mistake is that they believe that every level they draw on the chart will last forever. And that's not true. The levels don't last forever. Sometimes they break, like this one here, and it's very normal because if a key level of support never breaks, it means the price will never continue in that direction. And the opposite applies to resistance. If the price goes up and this key resistance level never breaks, it means the price will never keep going up. Here is something you can try. Open any chart you want here on TradingView. Here I have the Nasdaq 100. Zoom out to the hourly chart. Mark 2 to 3 levels where price clearly reverse either to the downside or to the upside. And I want you to watch over next week and see how price reacts when it gets close again. And if you are wondering why to do that, because this is the best way to train your eyes to see both support and resistance naturally. So, to recap, support is like the floor and resistance, it's like the ceiling. These levels matter because traders remember them and sometimes they flip roles. Mastering support and resistance is the foundation of technical analysis. In the next video, we will build on this by looking at trends, how to tell if the market is going up, down, or sideways, and why trading with a trend can make your life much easier.